Hi everybody, hi, welcome to Dear Investor and Dear Trader. My name is Francois Ablé. It's the first time to discover me. I'm the main trainer and founder of the GST, which is Global Street Trader Academy, which is a financial online academy where we teach people how to trade stock, bonds, indices, forex, ETF, and all the stuff. And we used to see us to find us every Monday. There I share my plan for the week on financial market, and I share also my vision on all technical aspects on financial markets. So I'm very happy to find you this financial broadcast, and I also kindly recommend you uh, to share and to like this program, which is help me for boosting the audience and reaching the most of people which have interest for financial markets. So you can share this broadcast, and don't forget to also leave a note or a comment on the review section on Facebook, which is for me important because it helped me for improve the quality of this program, and also it boost the audience and be credible through the time. So thank you so much for watching this video. So now we start with the disclaimer. So futures, equity, ETF, option, and CFD and other derivative used in trading have a great potential for rewards, but also a great risk on losing your capital. So you need to be very responsible in financial market, and trading is not a game. Is a job, and is you have to be very patient and wait with opportunity coming to you. Don't chase the markets. This is like a basic rules that when you start for trading, you need to be aware of that, and also you need to be aware of the risk and willing to accept them in order to invest the money that you can't afford to lose. So I am assuming that you will take note for this disclaimer before to start it. So weekly market technical analysis, May 17th. And also as a January that I show through this program, the summary of the presented assets is just based on the four major products that I follow during the weeks, which is USD CAD, Dow Jones Gold, and Euro Bond. Okay, so I don't need to going like on any market, because with just this product I can also be profitable, because if you follow correctly this product, and also you study them, and also you take note of the technical aspect that I share to you, you have to be profitable on the financial market, because I give the best scenario as much as possible that market could show you and could happen. So very careful with that, and be aware that it's just an idea of my plan. Okay, so before to going further on the USD CAD, the dollar, on the also the US 30, which is CFD of the Dow Jones, you need to be aware that all the product that I cite now, they have just one thing in common, which is the dollar, the US dollar. So you cannot trade on the market, you cannot trade these products if you ignore completely the the uh, the uh, the shape or the progression of the dollar. So US dollar this day are very bullish. Everybody knows that, and we see clearly on the through the graph that the this like green trend line, it's very strong, because he's kept his momentum, and we test this line maybe uh 4 to 5 times, and the dollar still like strong and is strengthened, and it's going further, of course. But you need to be very careful with the dollar, because the dollar, as now we saw the politics, they let us the markets know that they intend to hikes the rates interest maybe 3 to 4 times this year. And you know that fundamentally the American president, which is Donald Trump, is not like concerned to that the dollar will be strong. It's prefer that dollar will be like very cheap, as a very interesting on the international trade to be competitive against the China. So the bias, the politics and the fundamental bias on the bearish dollar still on the market is like uh, the spectrum holds all every day on like the bearish markets on the dollar. And you have to very careful if you see that the dollar is strong, it could be a momentum just progression. Because if we put some indicators, which is one of greatest indicator, which is Ishimoku, you can see the trap on, as I want to talk with you guys. So as you see, we see that without the Shimoku, I can remove that, or I can hide this. There you see, when you see like without Ishimoku cloud, we see that it looks like bullish, right? So even though the market still bullish, we break this with channel or with a descending wedge. But when I put um, Ishimoku cloud, you see that here is still like we still have some bearish cloud here, and the lagging span, which is here, if I show you big, if I zoom the picture, this lagging span, which is the essentially the price close like behind 26 candle, it doesn't like cross this descending channel. So we still have like we could see that the market on the dollar could going up if you progress and he coming to int the negative, the bearish cloud here, or it could goes to break on the line of the 12,000 level price as a US dollar index, which is a very significant resistance, because we see like here a flat here, and it is a clustered to the 12,000 level price, which is the a crucial impact, crucial level price of the US dollar. So very careful with the US dollar, because some people are just plan to make some a bearish scenario with euro dollar and Aussie dollar or USD CAD. So very careful with that, because the dollar, of course, we see without these fantastic indicators is still like bullish. But as long as we stuck above the 12,000, which is a crucial level for the dollar, I'm not like I'm not prepared from like a bullish, definitely uh, a bullish scenario on the dollar. I will be very careful with others product that I told you before this beginning of broadcast, which is the US dollar, the CFD of the Dow Jones and the gold, and also the USD CAD, and also euro dollar for people who trade this pair. You need to be aware and to have your chart of the dollar beside you, because don't be trapped, because the dollar is not, for me, is not definitely bullish. We trying to going further, but the 12,000 level keys on the dollar could be like significant resistance, because we see here a flat on the as a projection, as Ishimoku show us. We see that we have a flat here and is negative here. A cloud is negative, so we can going up here, break this line, of course, but fell here and come back to this uh like previous level, which is 750 uh, price zone here. So very careful with that. That's why I want to show you. Okay. So USD CAD is still the same as we saw the last week, because it's the same scenario. It doesn't like he very indecisive, and is not show us that like the how his real way that he want to go. So the like 129.40, which is the critical level and monthly close still present, and also the $27.4 is the resistance and the support level also has kept the market like above on it. So we are in we are like in the middle of two crucial level, as we see here, $27 and $29.4, which is very like a neutral zone. So we cannot like intend to do something here. We just have to let the market maybe going back to do it like a pullback at the $27, and then we can intend to buy the market, or just waiting that we break effectively this equal line zone, which is $29, and then we can buy the USD CAD. So now we intend to be neutral to bullish on USD CAD, because the dollar, as we see previously on the US dollar index here, I warn you to be careful with that, because it show you that it's bullish, but it's not bullish again, because you not cross definitively all the Ishimoku cloud has it show you as well. And we need to wait that every market on every product on this will be very see clearly the momentum, or the beginning momentum bullish that he supposed to happen. So I show you on the intraday what is looks on 4 hours. Looks, this market we cannot work on that. It's a very like a wide range, and between this level we cannot intend to do anything. Okay, so just waiting that we break like in this or in this, but through this range level, don't trade USD CAD. This is my recommendation. So as the US 30, which is the CFD of the Dow Jones. So the CFD of Dow Jones, as he showed us the last time that I showed it's pretty the same. It's pretty the same pattern that he showed, because I shown you before the possible descending triangle, and also I show you again the descending wedge, as you see here on the dash. So even the last time that we're not breaking this level, we could go into also again, it is still the same thing as a dollar. So if because dollar and indices generally are inverted correlated. So if the dollar like are bullish, if the dollar is bullish, the indices are sometimes bearish, and vice versa. So as we see on the graph on the US 30, which is CFD of Dow Jones, we're just waiting that first is break this line, and we see the close. We will see the close of the candle, just to show us if this market is belong to the buyers or sellers market, because looks here is very a tough zone that we works like so much time, and it's be like support, it be resistance. So now it's very key zone here, like the zone of the 23,540 to 24,000 to 780, which is the like 240 points intraday scalping zone. This zone is not like is not like a difficult zone to reach that, because you know that Dow Jones could go crazy during the trading day. It could make 400 points. It could make 300 points. So it's not a big deal to reach this zone. But we need just to wait that we break this descending resistance here, this oblique, and go to retest this zone. And then if you retest this zone and it close like as a maybe bullish candle or bearish candle, and then we can intend to do something. So now I recommend you to stay out this market just to see what is doing exactly. And if you break this descending resistance and we're going to test here, we can short definitely kind of sell off market, because it would be like it's maybe the third consecutively retest on this orange zone. And if we break this orange zone, then we can intend to buy the the Dow Jones, the DJIA, because right now, technically, for sure, we see some kind of pattern of opportunity on the market, but you not have to just consider the technical aspect. You have also to very careful with the fundamental news and fundamental bias on the financial markets, because you know that the Fed is very curious about the shape of all the indices, because they cannot continue to just to with the forward guidance policy. They're very curious about the rate interest and the level of the debt of the United States. So they're very stuck with just dilemma, because um, if they continue to do the forward guidance policy, they could affect massively the indices, and it could be overheat of the financial market. And also, if they're not like rate interest like at the right time, they could also break off the predictive the spread of the rate interest, which is driven by the US 10 years obligation at the United States. So it's very difficult and very tough strategy to for trading the indices. For sure, we see that it show us like a nice uh, bullish pattern, which is descending wedge. But we have just to wait, and if it just like get off completely for this pattern, and then we can intend to take a position as a short if you fail here, or if you break like completely here, we can intend to buy the market. So don't anticipate this market. We can put also an Ishimoku cloud to see uh, what's the general idea that I expose now. So there you go. You see that? So without to put Ishimoku, I know that the market could be bearish. So you see like a big as the same thing as at the dollar. We see a wide negative cloud of the Ishimoku. So if you go in there, we can fail here and going back on the blue line here, which is 24,000 0880 monthly close, and also the lagging span, which is the close of the price projected uh, uh, behind 2026 period. You see that if I zoom big, you see that it's not completely like it's still above the 10 can curve, and also the Kijun curve. So we still on the bearish bias on the Dow Jones. Okay, so very careful with that, and just looking that we show you a nice opportunity. As we see at the end of this financial broadcast, I will show you the key level to watch before to intend to trade on this product. So gold is the same thing. Gold will also stay like a status quo. We coming here to int the Kijun and the cluster of Kijun and Tenkan, also the Ishimoku. Ishimoku is very great indicator. If you have a chance, you have just study that, and it show you like clearly the as the name as the name said, it said Ishimoku Kinkoyo. So it show you the equilibrium on the market with just like one shot, you know. So as we looking here, we see that of course we below the monthly close at the blue line of the blue line here, which is critical level, and which is 1325. But the gold has like premises like bullish premises. So we just looking the perfect point to entry for entry to going long. But you can scalp also if you work on the gold on future. You can scalp the gold, but essentially between a key zone that I will show you at the end of this program is a kind of spread level. So as I recommend you also, for sure we it's gold like looks depend of the dollar, depends of the shape of dollar. Gold look like bullish because we still above on the Ishimoku cloud, which is a bullish signal. But very careful with the progression of a dollar, because the progression of a dollar is very related with all of products which is have concern and common to the dollar. So if the dollar show us that it's very bullish, and then we can intend to short gold, and also we can intend also to short the GIA, which is Dow Jones. Or if the dollar is fell on the 12,000 level, which is the US dollar index for FXM. If you fell that on this level, and then we can intend to buy gold, and we can also intend to buy the indices, because they are inverted correlated, of course. And as we can see at the intraday on the 4-hour time frame, you see that we clearly bearish here. So we just going until this level, and maybe expected to probably fail this level to going back, and then we'll see here at the 1300 level or 1305, and then if you retest this major support, we can intend to buy this dip. Okay, so very careful with that. So we're gonna finish with Eurobond. Eurobond is not like a big deal to see. It's pretty the same level as I show you the last week. Uh, we are for sure the monthly close, which is the pink line, and the support resistance level, which is the orange line here. So as long as we stay below this orange level, we cannot intend to do something. I'm suppose that is very neutral. And if you go in here, we int this level and we fail that, then I can short the Eurobond, because the fundamentally bias of the Eurobond is still the same as the Mario Draghi talk with the ECB conference, is also in the same dynamic to continue to put money on the financial market, which is the QE, right? The policy ultra easing policy. So as it continue to vehicles this uh, this this policy, economic policy on the financial market, the Eurobond supposed to rally, but he showed that clearly that he tend to stop this uh, program of forward guidance. So there we just see technically on this level, if we stay below this level, maybe it can show you like the just incertitude of this policy, and the market we can stay in this level. But if you are going here and we break this orange level, which is previous support and resistance level, then we can intend to buy the market until the previous monthly close. So as we see on January, the overall progression of a Eurobond is still like on the descending channel and descending also wedge, and is supposed to be bullish on this pattern. So just waiting the best entry low, and we can like buy the Eurobond, or maybe if you go into intraday on the futures market, as I recommend you, because trading Eurobond in CFD is very difficult because of spread and slippage. So you need to just work on this market on the futures if you have the possibility to do that. So as all my recommendation for today. So then we see now the key level, which is this to finish this program. USD CAD is a technical, short term is neutral, so we do nothing. Technical in long term is also neutral to bullish, depends the progression of the dollar, and also the same thing, same notice of Dow Jones. Dow Jones is still technical short term neutral to bullish, as we see, because we close to the contraction for the descending channel, and technical long term is supposed to be neutral to bearish, as we see long term at the level for Ishimoku cloud show us. It could like going to fail on the orange level zone, and then we can short the market, so we can see that after the progression of the dollar. Same thing as the gold also technical short term bearish to neutral and neutral to bullish and long term, and also eurobond. So what that mean, the key level, to watch, as I put here to help you guys, is just like a level that the market is susceptible to react, uh, like strongly, because dollar 2900 is a technical level, and also is a round level, so it's a psychologically level, so you need to care about that. And if you break this level, for sure you can buy it, or the lowest as the dollar 2720. If you break this level, you can like start to buy this level, okay? Or if you're going until if you're going below sorry, if you're going below the dollar 27, or if you fell below dollar 2000, then you can intend to short the market. But between that, very careful with the market, don't be trapped, okay? That's why I put this range or level, just to help to see you like a wide of range that potentially most of retail traders will be trapped. So very careful with that. That's why I said this here, keys level to watch. Is it pretty the same thing as the gold? If you work on gold as a futures market, and if you we break like 1315, you can buy the gold, just to going to take this progression of $3, which is 1315 to 1318, which is the signal. And then if you fell here, or maybe 1320, you can then short the market until like the previous level. And as the same thing as a real bond, which is 164 point, which is the key level at the weekly and the daily. So thank you so much for watching this video. Again, I recommend you to share this broadcast, to also put the massive thumbs up, and for help me to boost the audience. Also, you can let comments through below this video, or also in the section reviews on the Facebook. For me, will be very important, as I told you before to start this program. So thank you so much, and have a nice day, and we see you tomorrow. Bye.